You said earlier that it's still a little too early to declare victory on inflation. I wanted to circle back on a question that was asked at the initial press conference about what does the Fed say in regards to the inflation target as symmetric? Like, has the committee given any further thought in terms of how comfortable it would be rising above, whether it goes higher than 2.1, if it reaches 2.2, 2.3, and for how long? And now that you're planning to hold these regular press conferences starting next year, how do you plan to explain that to the American people, that inflation is not overrunning?
You know, what we've said in our statement of longer run principles and monetary policy strategy is that the committee would be concerned if inflation were to run persistently above or below 2%, persistently above or below 2%. And that's what we mean by symmetric. We're looking at it equally on either side, and it's a matter of persistent overruns. We know that inflation is going to bounce around. For example, as I mentioned, later this summer, there's a good chance that headline inflation will move up above 2% because of oil prices. Things buffet inflation back and forth, but so we acknowledge that, we understand that, and if inflation were to persistently run above or below 2%, then we would be using our tools to try to move inflation back in the direction of the target. We do understand, though, that we don't have the ability to precisely hit that target, so we expect that inflation will be above or below, and we just hope that happens on a symmetric basis.
Marty Krutzinger, Associated Press. At this meeting, you hiked the funds rate. You changed the dot plot to move from 3 to 4 for this year, and you took out a sentence that you'd been using for years about how long rates might stay low. But you say that none of this signals a change in policy views. But shouldn't we see from this combination of things that the Fed is moving to a tighter policy?
I think what you should see is that the economy is continuing to make progress. The economy has strengthened so much since I joined the Fed, in 2012, and even over the last couple of years. The economy is in a very different place. Unemployment was 10% at the height of the crisis. It's 3.8% now and moving lower. So really the decision you see today is another sign that the U.S. economy is in great shape. Growth is strong, labor markets are strong, inflation is close to target, and that's what you're seeing. For many years, as I mentioned, we had interest rates held low to support economic activity, and it's been clear that as we've gotten closer to our statutory goals, we should normalize policy, and that's really what we've been consistently doing for some years now.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.